IREDA or Indian Renewable Energy Development Agency is making headlines. Just today, the stock shot up by 10%. And over the past year alone, IREDA has continued to deliver multi-bagger returns with a remarkable surge of over 337%. But before we get into further details, let's talk about the company. IREDA is a public sector enterprise owned by the Government of India and works under the Ministry of New and Renewable Energy. Incorporated back in 1987, the company hit a major milestone by launching its IPO in November 2023 and getting listed on the NSE and BSE. The stock started strong, debuting at Rs 50, a 56.25% jump from its IPO price of 32 rupees. IREDA's main goal is to promote and support projects focused on renewable energy and energy efficiency through a range of financial products and services. As India's largest dedicated green financing NBFC, it plays a key role in providing financial help and other crucial services to boost green power capacity. Now, if you look at IREDA's journey, it's been quite impressive. Let's dive into their achievements and the broader impact they've made on the sector. One of the standout moments in fiscal year 24 was the substantial growth in their loan book for green projects, which saw a remarkable 26.81% increase year on year. This growth showcases IREDA's commitment to supporting renewable energy projects all over India. Whether it's solar farms, wind turbines, or hydroelectric plants, IREDA has been at the forefront of advancing India's sustainable energy efforts. And that's not it. In fiscal year 24, IREDA successfully reduced its gross NPAs by 102 crores to reach 1,411 crores through the resolution of 3 NPA accounts, bringing on the total number of NPA loan accounts down to 61. Moreover, even the net NPAs saw a decrease and recorded 581 crores in fiscal year 24 and recorded a net NPA percentage of 0.99%. Moving on to the financial performance, the company recently announced its Q1 results for fiscal year 25. IREDA has shown impressive growth compared to the same quarter last year. Revenue jumped up by 32% to Rs 1,510 crore from Rs 1,143 crore a year ago. Despite a significant increase in financing costs and employee expenses, profit before tax also saw an 8% increase, climbing to 475 crores, and profit after tax saw a notable 30% increase, reaching 383 crore. On the back of dispersing more loans, as we mentioned earlier, IREDA's interest income surged by 31% to Rs 1,482 crore for the first quarter of fiscal year 25, up from 1,132 crores in the same period last year. Now let's talk about the news that's making waves for the company. IREDA has announced that its board will meet on Thursday, the August 29th, to discuss a major funding plan. They're looking into raising up to 4,500 crores through various methods such as FPO, which is follow-on public offer, QIP or qualified institutional placement, a rights issue, preferential issue, or a mix of all these options depending on what's best and approved by the authorities. Now, the exact reasons for the company's funding plans are currently known only to them. But we do know that India's renewable energy sector is looking very promising. The government has set an ambitious goal to achieve 500 gigawatts of non-fossil fuel-based energy by 2030, showing a strong commitment to clean energy. To support this, there's a significant financial boost of 500 crore under the EMPS 2024 from April to September, and extension from the previous month of July. Plus, with 3,72,215 electric vehicles already on the road, green initiatives are gaining momentum. The government is also supporting offshore wind energy projects through the Viability Gap Funding (VGF) scheme, providing a solid financial base for these projects. Another interesting point is that IREDA has requested the government to include it in the list of entities eligible for capital gains tax exemption under Section 54EC of the Income Tax Act 1961. This section allows investors to get tax breaks on capital gains if they invest in certain bonds such as those issued by the government-owned companies. Currently, other state-owned companies in the energy sector like PFC Limited and REC Limited are eligible for this benefit. IREDA believes it has strong case for inclusion because it is a fully green company focusing exclusively on renewable energy. Once it gets included, it can attract more investment from the bond market. Considering all these factors, it's clear that IRED is well positioned to continue building on its growth momentum. But what should you keep an eye on? IRED's performance could take a hit if it struggles to manage its growing asset portfolio and keep non-performing assets in check. Fluctuations in interest rates might impact IRED's business, affecting net interest income and margins, which could in turn hurt its overall financial health. The company is in a highly competitive market. Increased competition in lending to the renewable energy sector, especially with new and emerging technologies, could negatively affect IRED's business and financial results. Lastly, since IRED's business is focused solely on the Indian renewable energy sector, an area with its own set of challenges, and how well these risks are managed will be crucial. Poor management of these sector-specific risks could slow down the sector growth and consequently impact IRED's business and operations. But looking ahead, IRED's upcoming board meeting set to discuss the funding initiative will be crucial. Nevertheless, IRED's recent achievements and its robust financial performance clearly shows its significant role in shaping India's renewable energy landscape. The company's impressive growth in loan book, notable reduction in NPAs, and strong financial metrics in the first quarter of fiscal year 25 highlight its commitment and effectiveness in advancing green energy projects. The broader renewable energy landscape in India, backed by ambitious government targets and financial support, highlights the promising future for both IREDA and the sector as a whole. Having said that, this is me, Rahul, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.